Gilbo Realty to do another video today on mortgage rates. Mortgage rates are up, so let's show you a real payment in the villages on a house. And let's talk about a really distressing and disturbing thing, and that is more and more people are borrowing from the 401k plans. It's kind of scary, but interest rates, 7.6% right now, over 7%. Rates have been creeping up for the last 2 weeks. We heard all this fluff news, I call it, about rates are dropping, the Fed's going to drop rates 6 times this year, all these BS lies coming from Wall Street. And does it really matter if they're going to drop rates after they raised them way up? I mean, it's kind of a stupid analogy, but that's kind of what's going on. I mean, right now, mortgage rates are creeping up, and they have been for the last couple of weeks. I just got off the phone with my mortgage lender, and he's like, I just got notified that they're going up again. Now, that's kind of scary, and he does loans with everybody nationwide, quite a few, and a lot of wholesalers too. And you know, he's looking at getting out of the business potentially, just because the demand is dropping off so much due to these rates. But you look here, I mean, Florida with a 720 FICO score, about 7.6%. Does that mean you can't get lower? No. You could probably buy that rate down, or maybe the bank will offer a standard, a special rate. You know, they might help you lower that. But it's still kind of scary seeing this trend. And if I take a house in the villages, like I was just looking at this one house I yanked up real quick on Danish Loop. Nice house, 3 beds, 2 bath, 1,500 square feet, down to $379. If I look at the payment, I'm pushing right now at 7%, let's say, to be nice, $2,800 a month. Now, what I did is I went into the property taxes and I upped that to 1.5% just to cover the bond. So the bond on this is about $36,000. It's about $2,000 a year, a little bit over $2,000 with interest and admin fee. So this puts it pretty close to where it needs to be. $195 HOA fee. Now that just went up $6. So you're looking at $2,800. Now, if I'm 3 years ago, maybe 3 years ago, 2.75. I got people in. $2,000, $2,040 on the dot, and that includes HOA, bond, right? Homeowners insurance. The only thing that's missing is your utilities and your garbage. So much cheaper. Now, a lot of people will say, "Well, geez, what's $700-800 a month, Mark?" Well, you know, to be honest with you, most people need that money. Maybe that's a difference between them getting the bronze healthcare insurance or the silver, right? Or the gold. Maybe that's a difference. Maybe that's a difference between how well they feed their children that month. Maybe that's a difference between how much of a car they can afford, because we all know you need that eventually, right? So $700-800 a month is a big difference, especially if you're going to the villages where most people are on a fixed income. The average income in the villages is $60,000 a year. That's $5,000 a month. At these prices, not too many people on a fixed income are buying homes in the villages right now, unless they have absolutely zero debt. Okay? Which is very hard to find sometimes. Now, there may be a lot of cash buyers, but cash buyers are only 34% to 35% of the village's purchases. A lot of people thought it was much higher than that. It is not, from what I just read. Okay? So still 65% of most people that are going to move into the villages need some type of mortgage. And at these rates, it's tough. And not only rates are going up, but taxes are going up. I mean, some of these folks that may have bought these homes, you know, a few years back, let's just take a look at this one to be, this doesn't go back far enough, but some of these folks that bought pre-COVID for like $225 are trying to sell their home for $400, $425. The problem is it's raising the taxes on everybody that's going to want to move into the villages that has been the typical client of the villages. So it's not a good scenario. Taxes are up, groceries are up, mortgage interest rates are up, payments are up because of the interest rates, credit card payments. I mean, look, but I just noticed mine, they're up to 19%. And I figured I have a pretty good credit card. I have great credit. But I can't imagine somebody paying 24 to 28% interest on a credit card right now. How are they going to pay it back? They're not. They're just going to pretty much pay the interest. So all this is happening. And what's going on because of all this is that more Americans are draining their retirement accounts, which is an even scarier thought. And this is an article on Fidelity Investments, where 17.6% of the clients have ongoing loans against their retirement accounts. And down below goes a little bit more detail. The data taken from its report show 2.3% of retirement account holders took out a new hardship withdrawal. Now, if you don't know what that is, that means they're in trouble and they need the money. 2.8% filed a new loan against a 401k plan, and 3.2% took an early withdrawal from their account. So this is not a good sign. This tells me that, between this, the interest rates, the inflation, and also the job market. I mean, I just saw a huge list of tech companies laying off people. It's over 100,000 people. And companies from all over, from UPS to phone companies to cell phone companies to Sirius XM, everybody's laying off 8 to 15, 20% or more of their workforce. Hundreds and hundreds of thousands of people are being laid off. When I see a job market, a job figure from the federal government saying that jobs are way up, an amazing job report, I call BS on that. Just me. It's just the way I am as a person. I'm not political. I don't care, but I'm calling bogus. And one thing I did read in the Federal Bureau of Stats figures was that the federal government, the state governments, and the local governments have been hiring about 70,000 people per month for the last 14 months. So if I look at that, that's almost 1 million people that governments have been hiring to make the unemployment figures look better. So I just want you to know, the economy is not very good right now. I'm actually, for some people it's really good. For most people, it is not. And the problem is when 80% of the population can't afford to do something, that puts a strain and a problem on the whole economy. But one thing I am worried about is that people doing these 401k plans, I hope, if they plan on buying a house with it, I'm not a big fan of them taking out of the 401k plans to buy a house in today's market. Rates of 7% or more, with prices coming down but nowhere near where they need to be. I'm worried that they're going to sink $400,000 into a house, and then in a year from now it might be worth $300,000, $325,000. I don't want to hear anybody tell me that they always come back, because the Florida real estate market took years to come back, if it even would have, if it wasn't for COVID. Okay, so be very careful taking your 401k plan money out of your accounts and sinking it into real estate at a time where it's close to the top of the market in the last 3 years. Okay, so Mark here, Gilbo Realty. Look, you can go here and do your own analysis on these properties. Definitely go look at the bond for all these properties. I would raise your property taxes to 1.5%. Some of these, 2% of these bonds, if it's a designer home. And look at rates. Scary moment for everybody, folks. But anyways, Mark here, Gilbo Realty. All I know is that I'm happy you came back to watch my videos. I'm trying to push out some other content coming up here soon. And keep an eye on the villages. I have a bunch of discounts coming into my email box, a bunch of new listings hitting the market, and times are changing. So anyways, take care of yourself. Have a great day, and I'll speak to you soon.